Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. Today we are going to talk about a very important topic, that is what should be your trading process. And to be successful in trading, you should have a defined process. And when I say process, that means you need to have some fixed set of rules which you follow on a daily basis, and no matter what happens you need to execute that without any doubt. So for example, if you are somebody who's trading equities, like your edge is that you want to every day pick up stocks, maybe buy or sell and make money intraday, maybe whatever is your defined target that you want to achieve, then you should have a set of process. For example, if somebody who is just starting and who wants to have a kind of a process, you need to simply focus on, say, a very simple set of rules, like for example, you can make a chartink scanner which is like RSI greater than 70, and you should find stocks on daily morning at 9:15. Go run the scan, RSI more than 70 for the stocks, and you will get a list of stocks in which you can further filter down by looking at the stocks which are in F&O, and then understand their chart patterns. And if those conditions are satisfied, you will see, for like, the price has to be about 200, price has to be about 20, and there should be a retracement coming at 20, and it satisfies your condition, then you go for it and set up your stop loss basis those conditions and wait for the target. So this, like this, you have to work basis the set of rules, otherwise you're not taking your trading seriously, and definitely you will never be successful. You need to treat this as a business and have set of rules and stick to the rules no matter what happens. There are various kinds of traders, there are various methods which you can adopt, there are various strategies which you can play, but always remember that number one thing, you should have a process. Follow the process no matter what, and do not change your process, okay, on a frequent basis. There will be cycles in the market where certain things may not work, certain things may work, so do not change the process as per the cycle of the market. You will feel suddenly that, oh, this process was working for me for 15 days, now 15 days I'm getting lost. So that is a cycle of the market. There's nothing wrong with your process. So have a point number one, process. Point number two, risk to reward management. Always ensure that you play for 1:2 or 1:3 risk to reward. Whatever is your stop loss, that you have to be calculating in the mind before you enter the trade, not after. So if you're buying a stock, say 100 stocks I'm going to buy, 100 quantity of any share, for example Reliance 100 quantity I buy intraday, then you should exit the trade if your 5 rupees stop loss is hit. Do not wait for anything else, or do not wait in hope that it will come back. Same thing you should apply with your portfolio also. If you have certain set of rules for your portfolio, please stick to it. And if the portfolio is going negative, and always define a risk for every stop. Say for example, on this stock I'm going to take a risk of, say, 5,000 rupees. If 5,000 I see on any day and it is not satisfying my condition, whether it is super trend or moving average, whatever condition you put in, you just cut the trade and do not block your money in that trade for long, and don't expect it to come back. There are 5,000 stocks more than that, and which you can get better opportunities and invest there and recover that money. If you stick to that rule, you will always be profitable. Most of the people, without having knowledge, keep holding the stocks which are going down. Stocks can go down for years and they can come back and go up for years. So timing is very important. You have to time it properly. Knowing fundamentals is good, but knowing where to enter is the most important thing which you need to focus. If you don't focus on that, you will never make a return. And if you are finding it difficult, then don't trade in the markets. Go and invest in mutual funds. Mutual fund SIP is also equally good. They will keep investing in the right time, for that you can make that kind of returns. But yes, today when we go on to the charts, I will try to explain you how I can search stocks, and what kind of strategies you can make on an intraday basis so that you get a decent risk to reward on a daily basis. So let's get started. Yeah, so we are on our charts. So first we'll start with our Bank Nifty analysis. So this is a weekly chart of Bank Nifty. As you can see, this is a 5-period moving average, and we have super trend, then we have 20-period moving average, and then we have 200-period moving average. So this is our setup. Okay, and if you want to add RSI or you want to add MACD, all that is fine, but you need to understand some basic concepts. Okay, and always look out for these kind of gaps between 5-period moving average and the price. This is very powerful, and whenever you find a candle which is closing away from 5-period moving average, that's a very good entry point for you. Always enter after this high is broken, and the stop loss will be below this. So as of now, the trend is bullish on a weekly time frame. It's following narrow range candles in Bank Nifty because there is a tussle going on between bulls and bears here. So we need to see how it goes, and this was a drop. You see this candle also closed away from 5 and it opened very far away from 5. Then see, it always comes back to the mean. Okay, whenever the price moves away from 5, it immediately snaps back to 5. If it is in a trend, it will snap back to 5 and move forward. But most of the reversals you can find when a candle without touching it is closing above 5. So look out for that. Maybe you can observe this for some days, you will understand. And our analysis on a weekly time frame is saying that it's going to be positive. Still 1, 2, 3, 4, 5th week it is still in the same range. So let's mark this with a horizontal line on this range, the high, the low of this range. So this range is marked. Okay, you can use a rectangle tool also to mark this range. Now let's go to a daily time frame. So on a daily time frame, you can see marking is helping, but there is one more positive sign. At 20, it has formed this candle. Okay, which we call it as bottoming tail bar because there is a long tail here. So why there is a long tail on this? Because there is a lot of buying which came. This was a full red candle, then a lot of buying came here and a lot of people bought, so the volume was high and it went up. So if you want to see the volume, you can look at that on this chart, which is our futures chart. So you can see the volume was also pretty decent on this. So from here it moved up, then it had a gap, it closed the gap. Now there is a narrow range candle which is again coming into this zone where it has taken the previous support. So there is high chance that it can come here, and if this breaks this high, then it can continue moving up. Okay, so but we have to see if this low is violated, which is your critical point, then there is an expectancy that it can come till 200-period moving average and find a new support, because if you look at the left, there is a support here, similar kind of a candle which has formed where there is a lot of buying. So still it looks bullish to me on a daily time frame. On an hourly chart also we'll see and analyze. So on an hourly chart, it's right at the place where there was maximum amount of time spent by the price. 1 hour, 2 hour, 3, 4, 5. Okay, it has spent 5 hours here, then again here, it came here and again it moved up. Now again it's coming back to this zone. So see this move, it was a 50% retracement of this move. Okay, take this 50%, and from there is high possibility that it can move up, or if it breaks this, then it's going to spend a lot of time here because this is its 200-period moving average. So this is again a support zone. This is all support zone. So price can rattle between these zones for longer period of time. So I'm expecting a lot of sideways movement for few more hours or days to come. So let's see how it goes. Monday I'm expecting, let's look at the 15-minute chart and try to see what can be the level. So on a 15-minute chart it broke this level, and next level where we can see is, okay, there is a good gap here in the price, so we can expect a good level of support here. You can see previously it was also a resistance. It came into this and dropped, came into this and dropped, came into this, then it broke with volume and moved higher from there. Now again it is coming back to this zone, which can act as a good support. So it is pretty clear that if you understand price action, you'll be able to draw these levels and move forward. Now coming to a second topic of the day, how do you find stocks on a daily basis? So what you need to do is just go to chartink and go to screeners. Chartink is a free tool which anybody can use, and there are a lot of scanners available here. You just have to register and find. So what you can do is you can just search for this daily RSI oversold, overbought. Okay, so you will land up on this page. Okay, if I click on screeners and search here, daily RSI overbought. Okay, when you search, you will get all this: oversold, overbought, everything. There are many scanners like this you can find. Okay, so I have searched for one of the scanner which is decent, daily RSI oversold or overbought scan. So here RSI, it's calculated on a daily basis and it's on cash segment, and the condition is that it has to be above 70 or below 30. So if you want to short stocks, definitely what you can do is you can switch off this. You need to align yourself with the market. If the market is going down, then you look out for stocks which you can short. If the market is going up, then you look out for stocks which are below 30. If you want to understand more about RSI, there is a video also which I've created, or you can just Google. It's called as Relative Strength Index, which shows the strength of the stock, and it takes into consideration volume, price, and all the other factors, which will give you a clear sense of understanding. So mostly my preference is to do it in futures, okay, so that your volume is taken care and plus fundamentals are taken care, because all good stocks are available in futures for you. So you can see there is Hindalco, there is Bank of Baroda, there is National Aluminium and PBR. So let's check out these 5 stocks now. First let's go to do I have if it is taking time, let me just go to trading view and show you these stocks. Our first stock is Hindalco. Second stock is Bank of Baroda. Third stock is about National Aluminium, or we will go for PVR. Let's analyze these stocks. National Aluminium. I will show you why I don't want to trade these national aluminum and all government stocks and PBR. Okay, so these are our list of stocks. So let's start with, okay, this is Hindalco. Let's do it on a weekly time frame. It's in a good uptrend, as you can see, beautiful uptrend. And here also you can notice the candle closing below 5, and from there the movement started. Now if you look at this on a daily time frame, okay, so then again notice this is a very powerful candle which is closing above the 5 period moving average, and it's far, so definitely it's giving us a short entry. If you short this here, definitely this is going to come back till the super trend and take support, and this can be its zone of support, but it's a interim period short candidate. Definitely you can find short entries in this. Now let's go to 1 hour time frame. 1 hour time frame, as you can see, price wanted to move up but it failed, and from there it started coming down. Okay, so now let's go to a 15-minute time frame. So 15-minute time frame, it is at a point where if it opens below this level, then it's definitely going down till 200 period moving average. So this is a good short candidate for you for Monday. If it opens down, then you can definitely short with your stop loss. I'll tell you the stop loss also, how you can strategize this on Monday. So say if it opens below this level, say 539, then your stop loss should be above this high of the candle, first 5 minutes high you can take, and you can enter this and do a short trade on this for intraday. Okay, so this is a good finding. RSI above 70 has given us good entry, so this is fine. And next stock what we have is Bank of Baroda. Bank of Baroda is at a good positive trend with picking up volumes, so I don't see this is shortable because it can open gap up also. It's in a good, making swing highs, higher lows. You see high, then higher low, then a high, then a higher low. So higher lows are there. It's not breaking any of the previous lows, so it's very risky for us to short this. And this, if this candle would have closed below this candle, then it would have been a short entry. But here also it's giving a powerful signal of closing above 5, and there can be a short-term fall which can come up to here and move. Since your 200 is also rising, it can take support at 200 and move forward. So you have to watch this. It's all about playing at the right time. On a 15-minute chart, it's very close to the support level, so maybe it can open here at this level 111 and then starts moving up. So very risky, may not be a right candidate for us to short. 3 minutes also you will find a similar pattern if you look at the left. So there is not much of a room because this entire thing will be a zone for you. So you have to watch out for this stock. So this stock I don't recommend to short. Let's look at other stocks. Let's look at PBR. National Aluminium on a weekly time frame is on a decent uptrend with good volume, and it's definitely not a shorting candle. Let's look at daily time frame. Daily time frame also it's giving a similar kind of a candle where it is closing away from the 5 period moving average, but it came back to 5, and it all depends upon how it opens on Monday. Let's quickly see this on a 3-minute time frame. 3-minute time frame, it is already away from 200 period moving average, and this candle has given you a good sign of entry, and it can go up from here. It can touch 124 also, but these levels are critical, so not a ideal candidate for shorting. Let's look at PVR. PVR on a weekly time frame is closing above 5 period moving average. So if you have noticed, all the stocks which have shown on RSI overbought, they're all away from 5 period moving average. So this is pretty good scanner, pretty reliable. You can depend on this. Now if we look at the daily chart, daily has given a good, see, the moment you notice this candle which is away from 5, immediately next day you could have shorted it, because short it will come and touch its 5 period moving average. Okay, so this can be a stop loss level, and if you want to short again, you can short for the target till 20 period moving average. Again, this is a short trade, not a long term trade, and it has done an impulse, big fall, and then impulse candle, and one more red candle can come down, so watch out for that. PVR on a 3-minute time frame, you can see it has broken the level, came back, and then it kind of broke this level. So your support is all here at this level. If it opens below this level on Monday, then you keep this as your stop loss and then short for the next target. So this is how we can simply define our process and try to make a very effective kind of a tool on a daily basis for a step-by-step process. Where is your stop loss and where is your entry and what should be your target. Always go for 1:2. If you short here, then your target should be at this level, 1591. First target is 1606. How am I saying this? Look at the levels from where it has bounced. As simple as that. Okay, this is your first target, this is your second target. You have to always look at the price on the left and see from where it has bounced or where it has got rejected. Simply mark those levels and then trade. So those are the footprints of money, where they have placed a lot of orders and from where the direction is changing. So it's a very, if you start observing price, you will understand, and candlestick patterns, if you understand it well, you can do wonders. And that has to be combined with all the other things in the market, whether it's moving averages, whether it is direction of the price action, whether it is any indicator. It's once you learn this, even if you watch a television channel, Z Business, or any other stock market channel, and live, whatever the experts are giving, you can just analyze that and see whether it qualifies your conditions or not, and take in a trade. You don't even have to scan. It's as simple, because somebody is putting that effort and scanning it for you. Those guys are paid for doing that, so maybe you can use their expertise and then open the chart and see if what they are saying is right or not. Don't blindly go by that. See, if they're giving a buy entry, just check whether the price is about 220 and is it retracing, then go for it. Wait for the price to come back to the 20 and take the trade. Don't just blindly buy when the price is too away. Okay, if you have to short this, don't short it here. You have to short at this level where it is hitting the 20 period moving average, or at this level where it is getting retraced from 200 period moving average, or 20 period moving average, or a super trend. There has to be a rejection at this level. This is a rejection. See the next candle. Superb fall. You have to always look at the wicks of these candles. If the wicks are bigger on the top, then there is a huge selling pressure which is coming from there. So that's how you need to analyze. And I hope you have learned something new in this video, and I have made it very clear for you that you need to follow this process, and only then you will be able to see some kind of consistency, and your thought process will be right to trade. Thank you so much for watching, and have a great day.